Hello, hi, and welcome. Today, the topic that we are going to study is about accounts of companies. Under this accounts of companies, which you might be aware, being a student of chartered accountancy, and you might have come across most of the topics either directly or indirectly in your financial accounting or management accounting. Types of accounts to be maintained in a company will be the first topic, under which you will come to know what are books of accounts, the term which we generally make use of it at various places, and what are the relevant books and the papers, as well as the financial statement, and what consists of the financial statement that you will study, and voluntary revision of accounts by companies, NFRA, National Financial Reporting Authority, so power of central government to prescribe accounting standards, and audit reports and board reports, corporate social responsibility, and the right of member, and filing of financial statements with the register of companies, and the last one is about the internal audit, which is covered under section 138. So books of accounts, when you come to study about books of accounts, it includes the various items, and all these things are to be kept by the company at its registered office for a certain period. So company shall have to prepare books of accounts, books and papers and financial statement at its registered office. Any other place in India as a board of directors may decide, and it should be kept open for inspection by directors, and it should be preserved for a period of 8 years. And failure in compliance of maintaining books of accounts as it is required would lead to imprisonment up to 1 year, and a fine of rupees 50,000 to 1 lakh, or sometimes both. See, very simply it is given: books of accounts, books and papers and financial statements are to be kept at the registered office or any other place as decided by the board of directors, and it should be kept open for inspection by directors, one thing, and the records are to be preserved under the Companies Act for a period of minimum 8 years, and the failure to comply to the above said provisions would lead to imprisonment and fine, or imprisonment or fine as per the act. So the general requirement is that every company shall prepare books of accounts and other relevant books and records and financial statements for every financial year. So these books of accounts give a true and fair view of state of the affairs of the company, including that of its branch offices. These books of accounts must be kept on accrual basis. This is the point you have to keep in mind. The books of accounts are to be required on accrual basis, and it should reflect the true and fair view according to the double entry accounting system, according to the double entry system of accounting. Accrual basis. What is meant by the accrual basis and what is meant by the double entry system of accounting? These are the things you are already very familiar. Accrual basis. So here accrual basis, as you might already know, in general, accrual basis means if the expenditure is incurred, then you have to take that particular item into your books of accounts. So there is another method which is a cash basis. So identifying and classifying, recording of a financial transaction takes place in case of a cash basis on the basis of receipt or payment of cash by the organization or the company. When it comes to accrual basis, the basis is different. So income is to be income and expenses are to be accrued on the other basis. Once you get incurred any expenditure, you are supposed to take that into your books of account. Once an obligation to pay arises to the company, immediately it has to take that particular expenditure into the books of accounts without waiting for whether you pay or not. Right. So that is the basis here. So, and the basis of accounting is an accounting with certain assumptions, and there are certain accounting concepts also, right? Going entity concept, money measurement concept, etc. All these are the accounting concepts, right? Cost consistency concept, etc. So based on these certain assumptions and the accounting concepts, financial statements will be prepared. Accrual concept is one of the four principles of accounting concepts, and accrual itself is a concept. Accrual itself is one of the fundamental principles of accounting concepts, which involves recording income and expenses as they accrue. So, distinct from when they are received or paid. If it is recorded based on the received or paid, it is a cash basis. Double entry bookkeeping is a method of recording any transaction of a business in a set of accounts in which every entry has been duly aspect will has a dual aspect of a debit and credit, and therefore needs to be recorded in at least two accounts. So double aspect enables effective control of a business because of all books of accounts must balance at the end of the day. The books of accounts includes the records maintained in respect of the following four. And as per the Companies Act, books of accounts includes all sums of money received and expended by company and matters in relation to which the receipts and expenditure take place. And it also includes all sales and purchase of goods and services by the company. All sales and purchases of goods and services by the company irrespective of payment or receipt of money, and the assets and liabilities of the company, and the items of cost as may be prescribed under section 148 of the Companies Act. And second is that what are books and paper. Book or paper as defined in section 212 includes books of accounts, deeds, vouchers, right? Deeds, vouchers like payment voucher, receipt voucher, journal voucher, contra entry voucher, etc., and writings and various other documents and minutes of the company and registers maintained on papers or in the electronic form. So, place of keeping books of accounts, place of keeping books of accounts, and it has to be kept at the registered office or at any other place as the board of directors approve. All the relevant books and papers and financial statement at its registered office, it has to be it has to prepare and keep all the books of accounts, and provided all or any of the books of accounts may be kept at such other place in India as the board of directors may decide, where such a decision is taken by the board, the company shall within 7 days thereof file with the registrar a notice in writing giving a full address of that other place. So maintenance of books of accounts in the electronic form. A company has an option of keeping books of accounts or other relevant papers in electronic mode, As per Rule 3 of the Companies Rules 2014, Rule 3 lays down a manner of books of accounts to be kept in electronic mode. Such books of accounts or other relevant books or papers maintained in the electronic mode shall remain accessible in India so as to be usable for subsequent reference. The information contained in the records shall be retained completely in the format in which they were originally generated, sent or received, and in a format which shall present accurately the information generated, sent or received, and the information contained in the electronic records shall remain complete and unaltered. The information received from branch offices shall not be altered and shall be kept in a manner where it shall depict what was originally received from the branches. The information received from branch offices shall not be altered or shall be kept in a manner where it shall depict what was originally received from the branches. So the electronic record of the document shall be capable of being displayed in a legible form, and it should display in a legible form. The backup of the books of accounts and other books and papers of the company maintained in electronic mode, including at a place outside India, if any, shall be kept in servers physically located in India on a periodic basis. The company shall intimate to the registrar on an annual basis at the time of filing financial statements following relevant information related to service provider: the name of the service provider, the internet protocol address of service provider, the location of the service provider, where the books of account and other books and papers are maintained on cloud, such address as provided by the service provided. And books of accounts and branch office, what is to be done is, where a company has a branch office or outside India, uh, it shall be deemed to have complied with the provisions of subsection if paper books, if proper books of account relating to the transactions effected at a branch office are kept at that office, and the proper summarized returns periodically are sent by the branch office. Right, this is the aspect which is to be kept in mind, and inspection by the directors. So any director can inspect the books of accounts and other books and papers of the company during business hours. And such inspection may be done by any type of director, and the director may be a nominee director, independent director, or promoter, or whole-time director, etc. And the period of preservation of books of accounts is 8 years, not less than 8 financial years immediately preceding a financial year. That is about the period. And who are responsible for maintaining the books of accounts is a managing director, whole-time director, or in charge of finance, and a CFO, or any other person of a company charged by the board with the duty of complying with the provisions of section 128. And penalty provisions, as we discussed, if the company does not comply, there will be a imprisonment which may extend to 1 year, or a fine which shall not be less than 5,000 but it may go up to 5 lakh rupees, or both can be given. Right. So the next topic is about the financial statement. What includes the financial statement? Let us have a look at it. So one is the balance sheet, second one is profit and loss account, third one is cash flow statement, and fourth one is a statement of changes in equity, and fifth one is any explanatory notes annexed to or forming part of financial statements. All these five will be regarded as a financial statement. And financial year in relation to any company is 1st of April to 31st March, and Schedule 3 has dealt with that, and a true and fair view should be reflected in the financial statements preparation. Right, and in case if a company contravenes to the provisions of Section 129, whether mentioned officers, whoever is the responsible, like MD, full-time director, or CFO, or any other person designated, so they will be held responsible uh, to if there is any deviation in compliance to the provisions of Section 128. So imprisonment up to 1 year and fine up to 50,000 to 5 lakh rupees, and or both can be given by the courts. So the next topic is reopening of accounts on courts or tribunals order. So whenever any books of accounts of any corporation or a company is maintained on some fraudulent basis which do not reflect the true and fair view, in all such cases, the courts or the tribunals may order for reopening of books of accounts, and based on that order, the corporate has to comply the court orders. So, who has to make an application? Application is to be made by any one of these following five to any court or a tribunal for reopening of books of accounts. One is by the central government, two is by income tax authorities, and three is by SEBI, and four is by statutory regulatory body like NFRA, etc. And fifth is any other person also may approach to the court by making an application for reopening of books of accounts of any company. And the court passes an order to that effect. Earlier accounts prepared in fraudulent manner, notice to be served to applicants, and affairs of the company were mismanaged related to accounts, notice to be served to applicants, and a notice will be served, and take representation into consideration if any, and pass a order to revise or recast the accounts. So this is the process of the entire reopening of accounts on courts or tribunals order under Section 130. So apply to court for reopening of accounts. Who can apply? As you know, it is the central government and the income tax authorities or the SEBI or any statutory regulatory body, and any other person also can apply. And revised accounts shall be final. Once the accounts are revised, it shall be final, and a time limit in respect of reopening of books of account also will be there. See, no order shall be made in respect of reopening of books of account relating to a period earlier than 8 financial years immediately preceding the current financial year, because uh, the companies will maintain the record for the last 8 financial years preceding the current financial year. Right, the next topic is voluntary revision of financial statements or board's report. So, voluntary revision, if you look at it, if it appears to the directors that the company financial statements, the board report not in compliance with Section 129 and Section 134, then on approval and order of tribunal, prepare a revised financial statements and revise the report any three previous financial years. Copy of order of revised FS and the report to be filed with the registrar. So here the voluntary revision or boards of the financial statements and board's report can be possible on its own for 3 financial years, and the tribunal will come into picture for giving an option to go for that. So constitution of NFRA. So as you are aware that the National Financial Reporting Authority is a regulating body of the professional institutes, and it is a statutory body, and it advises the government of India for framing the accounting standards and also to keep control on the activities of the practicing professionals. The central government constitute NFRA to provide for matters relating to accounting and auditing standards under this act. So it will provide for the accounting standards and auditing standards under this act. Notwithstanding anything contained in any other law for the time being in force, the NFRA shall make recommendations to central government on formulation and laying down of accounting and auditing policies and standards for adoption by companies or class of companies or their auditors as the case may be. And the NFRA monitor and enforce compliance with accounting standards and auditing standards in such manner as may be prescribed. The NFRA oversee the quality of service of the professions associated with the ensuring compliance with regard to accounting standards or auditing standards. NFRA also performs such other functions relating to ABC and as may be prescribed. This NFRA consists of a chairperson, who shall be a person of eminence and having a expertise in accountancy, auditing, finance, or law, to be appointed by the central government. Such other members not exceeding 15, consisting of part-time and full-time members as may be prescribed. So provided that the terms and conditions and the manner of appointment of the chairperson members shall be such as may be prescribed. So provided further that the chairperson and members shall make a declaration to the central government in the prescribed form regarding no conflict of interest or lack of independence in respect of his appointment. Right. So, notwithstanding anything contained in any other law for the time being in force, NFRA shall have power to investigate either suo motu or on a reference made to it by the central government for such class of bodies, corporate or persons in such manner as may be prescribed, and also into the matters of professional and other misconduct committed by any member or a firm of chartered accountants registered under the CA Act 1949. So it has provided that no other institute or body shall initiate or continue any proceedings in such matters of misconduct where NFRA has initiated investigation under this section. Right. So the next is that the NFRA have the same powers as are vested in civil court. So it has the powers of a civil court under the Code of Civil Procedure 1908 while trying a suit in respect of the matters for as follows. And Discovery and production of books of accounts and other documents at such place at such time as may be specified by uh, the NFRA, and it has the powers. NFRA has the powers to summoning and enforce the attendance of persons and examining them on oath. And NFRA can inspect any books or registers or other documents of any person referred to in Class B at any place, issuing commissions for examination of witness or documents. So it also have the power where professionals or professional misconduct is proved. It has the power to make order for imposing penalty of not less than 1 lakh rupees, but which may extend to 5 times of the fees received in case of individuals, and not less than 5 lakh rupees, but which may extend it to 10 times of the fees received in case of a firm. And it can debar the member or a firm from engaging himself or itself from practice as a member of ICAI, referred to in clause E of subsection 1 Section 2 of the CA Act 1949 for a minimum period of 6 months, or for such higher period not exceeding 10 years as may be decided by the NFRA. So NFRA have a power to monitor and enforce compliance with accounting standards and auditing standards, and it also oversee the quality of services undertaken and investigation under subsection 4 of such a section of the auditors of the following class of companies and bodies: corporate companies whose securities are listed on any stock exchanges in India or outside India, and unlisted public companies having paid up capital not less than rupees 500 crores or having annual turnover not less than 1000 crores, or having outstanding loans, debentures and deposits not less than rupees 500 crores as on 31st March of the immediately preceding financial year. So the auditors compliances and the auditors conduct of the listed companies and of the unlisted certain specified companies based on the capital paid up capital turnover or the loans and deposits borrowed from the outsiders will be the criteria for conducting of investigation by NFRA towards the auditors work and compliance mechanism. And apart from that, the auditors of insurance companies, banking companies, companies engaged in generation and supply of power, and companies governed by the special act for the time being in force, or bodies corporate incorporated by an act in accordance with the above said sections. So any body corporate and any company or a person or any class of bodies corporate or companies or persons on a reference made to NFRA by central government in public interest. So NFRA upon the reference of the central government in the public interest also, it can investigate the conduct of the auditors. So apart from that, the quality of service will also be tested in case of the auditors who are auditing the a body corporate which is incorporated or registered outside India, which is a subsidiary or associate company of any company or body corporate incorporated or registered in India. Right, these are all about the quality assurance that are to be taken care by National Financial Reporting Authority. and it do recommend the accounting standards and auditing standards for the purpose of recommending AS or SA for approval by the central government. The NFRA has to receive recommendations from ICAI on proposals of new accounting standards or auditing standards. So accounting standards or standards of for auditing will keep amending from time to time. So it may seek the additional information from ICAI on the recommendations received under clause A if required. The NFRA shall consider recommendations and additional information in such manner as it deems fit before making recommendations to central government. And it also they provided for certain punishments in case of non-compliance. And if a company or any officer of a company or an auditor, any other person contravenes any of the provisions of NFRA rules, the company and every officer who is in default or the auditor or such other person shall be punishable as per the provisions of section 450 of the Act. Right, and apart from that, any person aggrieved by any order of NFRA may prefer an appeal before appellate tribunal in such manner and on a payment of such fee as may be prescribed. Appeal can be preferred before an appellate tribunal. NFRA shall meet at such times and places and shall observe such rules of procedure in regard to transaction of business at its meetings in such manners as may be prescribed. The central government the central government may appoint a secretary or such other employees as it may consider necessary for efficient performance of functions by NFRA under this Act. The terms and conditions of service of the secretary and employees shall be such as may be prescribed. So here the NFRA headquarters are at New Delhi, and NFRA may meet at such other places in India if it wants to or as it deems fit. And NFRA shall cause to maintain such books of account and other books in relation to its accounts in such form and in such manner as the central government may prescribe in consultation with CAG. And the accounts of the NFRA shall be audited by the CAG at such intervals as may be specified by him, and such accounts as certified by CAG together with the audit report thereon shall be forwarded annually to the central government by the NFRA. And the last point, the NFRA shall prepare in such form and at such time for each financial year as may be prescribed its annual report, giving a full account of its activities during the financial year and forward a copy thereof to the central government. And the central government shall cause the annual report and the audit report given by the CSG to be laid before each House of Parliament. So these are all about the various functions and the duties that normally a NFRA body has to comply with. So the next topic is the central government to prescribe the accounting standards, and this topic we will study as a separate one in the second session. I thank you all and best wishes as always.